Hello. Stock review, like, share, subscribe. First things first, performance. Get that to pull up. Performance in the last month, 22.77%. Tally still coming in for today. I'm at 0.6200. No big deal. Just a regular day. I could have done better, but the issue is this: do I want to do better? The answer is that's good enough for me. For one day. Why? FTSI. Amex. I got rid of my over-the-counter. Matter of fact, let's just go take a look at what I got rid of. I get rid of these positions. I don't care. Once I terminate it, especially after taking a small loss on it. Over the counter markets. Okay, going through. It's over the counter. Totally forgot about that. Asian funds, retail, weapons. What was it? I know what it is. Sorry for the wait here, guys. Let's see if I find it a different way.
I actually got everything.
You just have to go back and see what I got rid of today. It wasn't performing. It was over the counter. I may have erased it off the watch list, I'm not sure. In an attempt to try to diversify, cover myself in case this goes. Not that I think it's going to do that right now. I'm still at USO, or UCO. And at this point right now, it's my principal is in the dust. Take a look at it. So if I did, at this point, the New York Stock Exchange actually outperformed the S&P. Haven't seen that in a long time. 6, 8, 6, 7, 8, 9, 10, 11. I'm basically 7 points. My principal is 7 points in this for UCO. I'm going moving average. KDJ up. Actually, that's not what I'm looking for. D. KD. You can see that there. At the end of the day, ECO sort of kind of was on a sell-off, which is understandable because it's doing well, but I don't understand it because of the 52-week. The powers that be, if they plan on buying their way back to normal, the question is, will they make it? Will they be able to do it? Will they be able to replace an actual real economy with just liquidity? I remember when Newt Gingrich and the Republican Party asked themselves, how much would it cost to buy the government? And then George Bush got elected. They made that happen. I think they might be able to buy the economy out from under everyone. If that's the case, then my hopes of turning a $24 stock into a $500, selling at $500 per share, is maybe 6-7 months away. That's only one story. That's only long-term oil ETF, a fixed income. FTSI, Amex. Let's see where I'm at with this. I finished in the positive, of course. I'm totally in the positive, but the actual IPO at the end of the day, broke even. And it's going in the opposite direction at the end of trading. It'll be an hour into the aftermarket till we really see what who's being stimulated. Why do I have this? Right? Why do I hold this? Is the question. That anybody with a brain would ask. Financials. Well, fracking is a non-economic activity. It does not make money. What it does do is drive the cost of oil and gas up, which connects it to financials, because that's where they're getting their money to frack. especially here in Texas. I'm holding this FTSI for one reason, because it's on the target list of the Fed, target list of the financial banks to prop up. And I will hold it longer because at some point in time they will get bailed out. Here's the case. How you have a stock that trades for $3.04 before COVID was at $118 per share. This is another one. I am trading mostly stocks that have a lot of meat on the bone. I'm not interested in $10. I'm not interested in $20. I'm interested in 200 and more, because this is the kind of environment this is. If you're trading stocks in the 52-week is 10, 15 points, and it's already halfway towards this 52-week high. I don't even know why you're trading something like that. You want to quadruple your money. This is the opportunity to do so. Yeah. And this is what the big boys are doing. Definitely. And once again, two reasons why I'm in CWCO. One, they provide water to frackers, period. Do water technology in arid areas for frackers or for just regular companies just pumping oil out of the ground worldwide. Plus it's on the NASDAQ. And once again, that's another 15 points. My principal is 15 points in the dust. I don't plan on ever worrying about my principal again with this. I'm going to hold it long, right? Obviously. And this is sort of kind of like this is my weakest position with the least amount of meat on the bone. 52-week range, 12 to 18. But if you look at Z stats on it, it's an underperformer as of now. And those are only three positions I hold. This is where I'm going next, though, ladies and gentlemen. Electronic cars. AYRO. No meat on the bone. Period. $1.08. 52-week range starting, ending in 8.75, $8.75. It's traded on the NASDAQ. It's enough meat on the bone for me. And they do solar cars, but pull this up here. AYRO Inc., formerly known as Drop Car Inc., is a designer and manufacturer of purpose-built automotive-grade electric vehicles, EV. The company EV models include a 311 and a club car, blah, blah, blah. Three-wheel vehicles, inline seating, just some obscure company. Reasoning for this is just to get liquidity in the market. I'm not particularly totally interested in what they do or care. And most traders, from what I can see right now, really don't care about the companies and how well they perform. That's a waste of time. It's all about taking advantage of inflated stock. So I'm over leveraged in oil. I thought about that this morning. So what are we gonna do? TECT. I was in on a video conference today with their CEO. They're not yet. They're publicly traded off and on, but if you go to over-the-counter markets and subscribe to their newsletter, you'll be able to see the video. Basically, they're into gold exploration, and they have a new concept on figuring out the problems before they start digging. 1, 2. They have a bunch of new drills and stuff, and new equipment, but I'm not betting on gold coming out of the ground, but I am betting on people looking for gold. Gold is in shortage, but if they can pull it out of the ground and make a profit, you can play that game if you want to. All I know is these guys, what they do is they do the initial research on the mines, and they own the property on that whole, they own the property where they're doing research. My best bet is they're going to go ahead and lease 5,457 hectares, 270 kilometers of Alaska. This is what they got, right? Prime gold country. As long as they hold that property and they do their research, they'll be able to lease to any physical miner. If the physical miner is profitable or not, I don't care. I don't do paper metals. But if they want to, it's just going to be another outlet for financials. Some way to burn the money. Matter of fact, let's go to financials, which are really truly sci-fi banks, too big to fail. As expected, off the hook in the profits, even though there's not too much meat in the bone. If some of them break 52-week highs, yeah, we'll see. I'm waiting for the next 52-week cycle. While the market is pretty much, we're still on the same 52-week cycle no matter how high a market goes. Dow did 26,287.03, blah, blah, blah. Beat the S&P, like I said, S&P 3,179.72, NASDAQ 10.43. 6.5, all-time high for the NASDAQ. Dow beat the S&P. Let's see the 10-year yield. 10-year in the positive 0.007 hundredths. If you get 1.00001% on the 10-year, then financials will break 52-week highs. So basically what we're talking about is the bottom floor can't support but another maybe 2-3 weeks of these 300 point gains. They're going to have to, let's go back to the derivative bond market. Real simple here if you do your research. Subprime bond market 53 low, 52, 59 high. We're going to have to see a lot of these subprimes break 52-week highs at least by like 5%. So we're looking at something like BNDX, Japanese yen, US currency regime. It's got to be pumped up. Same thing with BNDW, US, Japanese, or Euro currency regime. It's a little bit higher at 82, 52-week range, 74, 82. I sold these last week. Just not enough meat on the bone for me. And we showed a steady trend going upwards. So I left the security of the bond market to take advantage of this open market. Question here is, HYG, high yield, 67.88. That's the low, that's the high. 52 weeks. This will be the last, definitely to break its 52-week highs. But now we got TLT, the snitch in the whole game. It's down. So definitely keep your eye on the 22-year Treasury derivative. So keep your eye on the 22 Treasury derivative and the hard 10-year Treasury. But you know that we're sort of kind of at the top if we were in normal conditions, but we're not. So why am I saying all this? Bottom line, because everybody's making great profits, but when is this gonna correct itself? And do you sell if it corrects itself, or do you hold on to your positions? At this point, I recommend no new positions, only bringing down your initial investment by buying more, or bringing down your what? My mind together. Think of it some other time. Bringing down your initial investment by buying more shares of the same thing at this point, and venturing out in low cap, trying to take advantage of a few dollars here, a few dollars there, to try to offset any kind of corrections that might occur. It's pretty much my take on it, ladies and gents, people that subscribe to Stock Review.
Can I get, I need 2 more ounces of that same stuff.
My choice, pretty much,
The 4 nines.
that I'm going to do this with is this small little electric car company on the NASDAQ. Nah, I don't think so. We'll find something to hedge myself with. Anyways, please like, share, and subscribe. Thank you.
Thank you.